This is the briefing for Thursday, April 25th. I'm going to start with a little bit longer term chart. I'm going to start with a daily chart tonight on the analysis because I think there's a good trade lesson involved here. Now, this is the spiders on a daily basis. You can see the rotational area that we were in for quite some time, really. And you can see through here, we really had very short range days, very difficult to try and trade to make anything out of this market during that time frame. But then I think this was the 15th. We had a breakthrough to the lower extreme. Now, the key here was to determine whether this was the beginning of something greater in degree of time and price that would correct this run by taking out previous higher lows, which is exactly what it did. And then when would this reach a point where we would potentially see some type of a bottom? So we could look at this as a run and then a pause and then potentially a run. Now, a couple things happened. One was that we had a pretty significant divergence in market breadth going into the low of the 19th. That's this low right here. Now, you can see that the market was strengthening internally while that was happening, and volume was increasing, suggesting that this was becoming an impulsive move to the downside. But market breadth was also giving us a warning that potentially we were going to reach some type of a bottom before we saw some type potentially of a counter trend rotation or the end of this counter trend move to this run here. As it turned out, as we want to analyze this move, we know that we were getting ready to come into a key reference area, and that's exactly what we did coming into this 490 area in the spiders. Now, I'm just going to use the spiders as an example so this briefing doesn't get to be too long. So the next question was, is this the low? Are we done and we're headed back up? Or is this some type of counter trend rotation that is going to correct this move here before we see another thrust to the downside? Therein lies the biggest question that we're facing, at least at this point in time. Now, this is hourly charts. This is the spiders, the Qs, and the IWM representing the Russell. Now, you can see the divergence in breadth coming into this low. Same thing with all of the indices. They were all diverging. Market was strengthening internally, and that led to this low that we saw this rotation back up in all three of the indices. Now, as we analyze this, and I covered this in the briefings, this appeared to be developing into a three-step counter trend rotation where there was equality between legs 1 and legs 3. Now, this yellow trend line here I've had up for the last couple of briefings, suggested this was where equality would end. In other words, leg 1 would be equal to leg 3 at about the 507 area right here. In terms of the Qs, 1 and 3 were equal at 426. So you can see the spiders came right exactly to that area of equality. The Qs exceeded it slightly, and the Russell did not quite make it. So we did have a three-step counter trend rotation. Now the question, as we faced yesterday's trading, was we started to go down, and then we paused for the rest of the day. So that left us really in suspense coming into today's trading. But then we had this move to the downside. And in last night's briefing, I talked about the fact that this has the potential of developing into a more complex counter trend rotation where this is a three-step leg 1, this is a leg 2, and leg 3 potentially is yet to come. Now, what I also said was that if we take out this low, and I pointed that out in the briefing, that would then suggest that this is one and done, or I should say 3 and done, and this is the beginning of a new trend to the downside. But as you can see, and it's important to remember that these key reference areas are not exact points, they are areas. So basically we had this area defined as about the 499 area, and we actually came down just a little bit below the 498 area before we saw this buying tail that came in. And the same thing happened in the Qs. The Qs came exactly to this lower level right at the 418 level, and the Russell did the same thing as the spiders came down, but immediately buyers came in and drove it back up again. So basically, what this is telling me now is that the higher probability is that this is a three-step counter trend rotation of leg one. Leg two completed today, and leg three is in the process of potentially being completed tomorrow or maybe even on Monday. But so basically, while this was equality for this leg, the red trend lines I put up are equality for this being leg one, this being leg three. So we can look for potential, and this is going to be important, because if this strategy plays out, it could be a pretty dramatic and pretty incredible strategy. Is that if we reach 511 or in that area in the spiders, and in the Qs, the level is going to be the 435 area, and in the IWM it's 202. If we happen to reach that area and reverse from there, the next thrust lower could be a very impulsive move to the downside, which then we would have to go back and we would have to look at and say, okay, this is leg one, this is leg two, this is leg three. So this is one, that would be two, and three would project the distance from here to here. So you can see how the math kind of gets a little bit convoluted in determining the difference in time frames of what's occurring from a longer term perspective, and then kind of zeroing down into the shorter term time frames to see what's happening shorter term, so we know what's happening. So basically, the key now is going to be the low of today in each of the indices. The spiders, that low is the 505 area. In the Qs, that low is going to be 418 area, and in the Russell, that area is now going to be the 194.50 area. So basically, if we take out the high of yesterday in the spiders, the Qs, and the high from the 23rd in the Russell, and it looks like the Russell is a little bit weaker, which is typically another signal that potentially the market is not as strong as some would believe, and that we could see some type of a move back to the downside. So basically, watch what happens tomorrow, because you can see the buying that came in after we opened. We opened in the morning today, and you can see that basically it has come back up and closed the gap. So it appears that the strategy of leg one, leg two, leg three is playing out, and these are going to be very important key reference areas going forward. On the other hand, and this is, and I talk about this all the time, our job as traders and investors is to analyze the market and try to decide the higher probability of one event occurring over another. And that basically is the market going up or is the market going down? Right now, I think the higher probability is we are going up, but when we reach this point here, and depending on what happens, if we see a continuation of buying tomorrow, depending on what happens with the internals, that will give us a higher probability that potentially this will be a complete three-step counter trend rotation, and the next move to the downside could be a very, very impulsive move. On the other hand, the lower probability, at least at this point in time, is that this is the bottom, this counter trend move to the downside is complete, this is something else that's in the process of developing, and if we see a higher high, if we take out yesterday's high, and volume is increasing, breadth is strengthening, then that would suggest that the lower probability of this being a low is becoming the higher probability, and everything that occurs around this area where these red trend lines are is going to be extremely important going forward. So strap yourself in. I think that should we reach these red line areas, and the market internals are not confirming the market strengthening, that would suggest potentially the next thrust lower is in the process of developing. On the other hand, and I should point this out, the market does not have to have equality between legs 1 and 3. We could basically trade up to 508 and start down after that. The key to that is going to be what happens with the internals. If the internals are not strong enough to drive price up to these levels, then we're going to see potentially another move back to the downside. If we trade through these lower levels I just pointed out, that suggests that this is complete, and we're going to test this low, and potentially we'll see an impulsive move to the downside. These levels are critical going forward. Have a great night, and I'm going to be traveling tomorrow, so I will try to update this. I can't do a video, but I will try and update this just through writing an email to subscribers. Have a great night.